A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the euro, which is looking promising. And even in yesterday's session, we had considered this possibility of euro continuing to move on the upward trajectory, and that is holding well in today's session as well. So we will see if there are some fresh emerging opportunities for us to consider taking fresh bets on the euro USD. If you consider the trading context for the day, earlier in the day we got the CPI numbers for China, and here, as expected, there is some uptick in the inflation data for the China. And now, if you consider the year-on-year numbers, the China's inflation stands at 2.5%, which is slightly higher compared to the last month's data. So there is a rise in the inflation. But if we consider the month-on-month numbers, this is actually lower, and there is a decline of 0.1% in terms of month-on-month for the month of June. So these are actually mixed numbers. There is a uptick on the yearly side, whereas if we consider the month-on-month numbers, as I said, there is a decline. Later on, during the European trading session, we got the Germany's trade balance data, and here, though the Germany is showing the trade surplus of 7.1 billion, but this surplus has narrowed pretty sharply if we compare the same numbers to what it was during the May of 2019. In those months last summer, the Germany's trade surplus used to be in the vicinity of 20 billion euros, and now it has come down to only euro 7.1 billion, and this is being attributed, of course, to the fall in exports, and there is a fall in imports as well, as many parts of the economy were locked up. But I think to some extent, at least, we will see the trade data improving in coming months as more and more parts of the world come online for trade. Even Germany has been one of the fairly successful country in containing the coronavirus outbreak. So we can see the on the import side, Germany's demand picking up, and as the time will pass, the exports will also pick up. Moving on to the United States data, during the North American trading hours, we got these weekly initial jobless claims and the continuing jobless claims as well. And if you consider the figures for week ended 4th of July, now the jobless claims stand at 1.314 million, and this is lower than the expectation, and that particular point that these numbers are actually better than the expectations has also helped the S&P 500 move higher. Of course, even the underlying momentum is on the bullish side for most of the equity indices in today's trading session, and here the US equity indices are also trading higher as the US session has begun. And I think we will continue to see this bullish momentum at least for foreseeable future, at least this week and next week. Of course, you can never know, but still the odds are in favor of continuation of the bull trade. And as I have already said, the bullish momentum is there, and that is most prominently visible in the all-time highs and the close on all-time highs for the Nasdaq. And Nasdaq has been the leader of the pack, and it is going to continue to hold on to that position for next next couple of next many session, not only couple of, as I think the financials and other sectors of the economy will take time to catch up with the tech sector, which has actually been one of the beneficiaries of this lockdown, as more and more people shifted their transactions, their buying and commerce and all stuff which can be done online. Now the shift is happening, and that has benefited many of the tech companies. Moving on to the technical segment, we will see what are the prospects for the Euro USD and the USD JPY in today's session. And here I would like to note that both of our projections in yesterday's session have come really well, and the anticipated levels have been reached. And now, as we consider the fresh opportunities in today's session. I think we can be fairly confident that this bullish momentum will continue in the Euro USD. And as I have said in earlier sessions as well, the next target works out closer to this prior swing high, which is there around 1.142. And we will eventually even see this swing high being breached, and the move towards 1.15 looks feasible. But if we consider today's trading setup, if we consider the intraday trading opportunities, then I think even if the Euro USD doesn't really go on to touch the 1.15 level, still we can profit fair amount, and that's what we are going to consider in today's session. And again, here I would like to reiterate that Euro USD has found good buying momentum, good support on the this Fibonacci retracement of 38.2%, and that kind of indicates the strong bullish momentum in euro. And one of the major factor has been the weakness in the USD, and that is what has driven most of the other major currencies against the USD. And euro has been kind of one of the leading currency to benefit from the weakness in USD. Now, if you consider the pivot point series for this month, here we have this central pivot point around 1.125, and that really helped the rebounds of euro USD after consolidation closer to 1.120. And even in today's session you can see these sharp moves. Of course, we had this prior swing high being made closer to 1.137, and then from those levels we saw this sharp deceleration on the downside. But we have this strong support zone into play around now, the 1.130 levels. And because of that, I feel we can indeed continue to look for a fresh opportunity even in today's trading session, even after there has been strong moves on the upper side already in the euro USD. Still, things look promising, and I think we can target on the higher side this first resistance of this month's pivot point series. And of course, the price action has also been in the upper band of this regression curve for last two trading session, and because of that now the curve is starting to flatten to some extent. Earlier it was bending on the downside. Now as price action has continued to move higher, it has flattened, and I think after due passage of time it will even bend on the upside if the price momentum continues to be on the bullish side. Here on the hourly chart, we have this 50 SMA coming into play around 1.131, and also these prior swing highs are there around 1.130. And if we simply consider the price action so far, that even then you will be able to infer that there is some buying momentum coming into picture around this 1.30 level. So because of that, I am fairly optimistic of any trading opportunity on the long side being generated on the levels close to 1.130. See if we in today's trading session, if we get any opportunity to buy, to go for long trade as close to the 1.30 levels as possible, then I think we can hold on to that particular trade for at least a move towards 1.14 or even beyond that. And on the lower side, a stop loss of around 1.125 should be good enough. So for a risk of around 50 to 60 pips, you can target around 100 pips on the upper side or even beyond that if things turn out well. And I think we can continue to hold on to partial positions if the momentum is strong, and then I think eventually we can even continue to hold on these long trade with possible targets around 1.150. But even for our immediate concern from short to medium term perspective, I think we can bet on the euro USD to rise above 1.140. So if we are going for any trade in the vicinity of this 1.130, then that opens up the possibility of profiting almost 100 pips on the high side with stop loss coming in of around 50 to 60 pips, and that will give us a risk reward ratio of pretty close to 1 is to 2. And of course you can play with target side a little bit. You can extend it, or you can even reduce it to some extent, but roughly speaking you will get a risk reward ratio of 1 is to 2. Now moving on to USD JPY's technical outlook. This is the daily time frame chart, and in yesterday's trading session we had considered the opportunities for scalping the USD JPY, and in yesterday's session also we were bent on going for short sell. And though I think as I recall yesterday's levels, we didn't really get the USD JPY towards 107.7 to 107.8 zone, but even though we didn't get for that fortunate, I think still if you had gone in for a trade and you are close to 107.5, still you might be in a decent amount of profit in today's session. Now things are looking fairly clear that there is going to be a break on the downside unless and until there is a further break on the upside. So here now the formation is of lower lows and lower highs, and that gives us hope that we will see the USD JPY falling to these immediate swing lows around 106, and that's what we are betting on in next few trading session. So here, if you consider the pivot point series for this month, then we have this central pivot point, which is going to be crucial marker for us while determining whether to go long or whether to go short. And as I had said earlier as well, unless and until there is a fresh break above this central pivot point, I think the bias needs to be on the short selling side. Of course, it's better, always better to get an entry point as close to the resistance zone as possible. But even in today's trading session, though it is trading on the lower side, we have already sharp fall of almost 50 to 60 pips, and now the USD JPY has not really moved much in today's trading session. But still, even from the current levels, I am actually expecting the USD JPY to continue to move lower, and eventually, as I said, we can expect it to get closer to 106 zone. The price action has now moved to the lower band of this regression curve, and in due course of time, we can expect it to flatten to some extent. It is still on the upper side, and it is pointing on the bullish trajectory, but because of the price actions movement on the lower side, I don't really expect it to be sustaining itself in next few trading session. So here on the 4 hourly chart, for us the crucial marker is going to be this central pivot point, which is just tad below 108 level. Now, if we are going to go for a fresh trading opportunity in USD JPY, then any short selling opportunity in the vicinity of these 50 SMA can be exploited to our advantage, and I think the stop loss can be just little above these 200 SMA. So from that perspective, any move towards 107.4 to 107.5 should be a good opportunity to go short, and I think a stop loss of around 107.75, that is a stop loss of around 35 to 45 pips, would be good enough. And on the lower side we can target almost 100 pips, as we are expecting the USD JPY to move towards 106 zone. So from that perspective we can of course get a 1 is to 2 risk reward ratio. Here we had this long consolidation for almost 2 weeks where the USD JPY struggled to cross above 108, and it did made these highs closer to 108. To be precise, in the price band of 107.7 to 107.8. So after this due consolidation, we have now finally a break on the lower side, and that makes the formation pretty bearish, as it indicates that USD JPY failed to cross above the crucial resistance zone, and then the bearish momentum kicked in and pushed the prices lower. And that is also fairly true in today's trading session, as we are seeing renewed selling momentum in the USD JPY's charts here. So that's it from my side for today's trading session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.